Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Few weeks back, Deutsche Bank did a survey. What is the biggest risk of market in 2026? Few economists suggested that appointing a new Fed chairman can be a market risk and other many factors. One of the most important answers, which lot of economists said, that overvaluation of US equity market because of tech bubble. So in today's presentation, we are going to discuss what is the outlook on US equity market, what impact it is going to have on Indian equity market, and then finally, what is outlook on dollar rupee pair. Let me give you an interesting data point. If you see the chart, it is clearly observed that currently US equity market is trading at a much higher value as compared to other emerging market and developed market. This kind of valuation was observed last time near 2000 when dot-com bubble happened. Second indicator which is suggesting that US equity market is currently trading at overvaluation is Warren Buffett indicator. Warren Buffett indicator is nothing but total market cap divided by GDP. If the ratio is trading above 156%, we say that market is trading overvalued. Currently, Warren Buffett indicator in US is trading close to 220 percentage, which is signifying that market is significantly overvalued. Second, another measure to understand whether the US market is trading at a higher valuation or not, that is how much percentage of its index, MSCI index, is trading above its liquidity. So for example, if you see the chart, currently it is trading at 270% of US M2 money supply. To give you a better perspective, if we compare it with 2022, it is trading at 120% above 2022 levels. It is trading 40 points above its 2000 dot-com bubble, and it is trading 75 points above its 2008 crisis. Now, if we compare it with other developed markets, then UK in France is currently trading near 60% of its M2 money supply, which is quite below its pre-pandemic level. This is clearly signifying that US is trading at much higher valuation as compared to other developed market and emerging market countries. Now the question is, what is the outlook on S&P? S&P will have a strong resistance near 6,980 to 7,000 kind of a level. We are expecting that it is likely to move towards 6,720. That is the first target, and the second target is close to 6,530 kind of levels. Now let us discuss what is the target for Nasdaq. If you see the chart, 25,860 to 26,190 is going to act as a very strong resistance for Nasdaq, and we are expecting that Nasdaq will move towards 24,000. That is the first target. If that is achieved and broken, then we are likely to move towards 22,900. Now let us understand what is the outlook on Indian equity market. We are expecting that Indian equity market is likely to outperform US equity market in terms of relative basis. But saying that if US equity market will be under pressure, then Indian equity market can also be under pressure. In the near term, 25,400 to 25,200 is going to act as a very strong support for Nifty. Once it is broken that kind of a level, then we expect a move towards 24,500 kind of levels. Now let us discuss outlook on rupee. In the Union Budget of 2026-27, Ministry of Finance has allocated close to 7.85 lakh crore in defense spending. That is an increase of close to 16% in defense spending. Most of our defense spending comes via import. To give you a perspective, recently we have signed a deal close to 3.25 lakh crore with Rafael. This all defense payment is going to create a structural demand for dollars. So larger defense payments create structural demand for dollars. Second, if we observe Friday data, FIIs have sold close to 7,000 crore from Indian equity and debt market. Apart from that, RBI short position close to 66 billion in the forward is also going to create demand by RBI itself whenever flows come. Lastly, prices are expected to move higher towards 70 to 72 kind of a level. If we combine all of this factor, it is giving us a signal that 90-20 to 90-40 is going to act as a very strong support for the pair. Once 90.80 is broken, we are likely to move towards 91.20 and 91.50 kind of levels. If we combine all of this factor, it is giving us a signal that 90-20 to 90-40 is going to act as a very strong support for the pair. Once 90.80 is broken, we are likely to move towards 91.20 and 91.50 kind of levels. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of them are taking costing near 90 to 90.20 kind of levels. We will suggest them that they can cover 60% of their exports near 90.70 to 90.80 kind of a level. For remaining position, we will suggest them they can wait for higher levels of 91.20 to 91.50, keeping 90.20 or costing whichever is higher as a stop loss. Now let us discuss strategy for thick margin exporters. For thick margin exporters, we will suggest that either near 90-40 kind of a level, they can cancel their profitable contracts, or they should use their existing forward contract for further booking. They can keep a stop loss of 90.20 and wait for higher levels of 91.20 and 91.50. From last few weeks, we have been discussing with all our importer clients that 90-20 to 90-50 is a good buying zone. We will suggest all our clients and prospect that they should continue to cover imports at all the dips, because gradually we are expecting rupee to move towards 91.50 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.